Hello, everyone. This is Danielle. How are you doing today? Welcome to the close in the Mastering the Trade trading room. How is everybody doing today? We got a pretty nasty reversal on our hands. So let me just start off by taking requests. I know you guys have a lot of charts I'm sure that you want to look at. Basically this is it's one of those things where it's like, is it a huge move? Yes and no. It's a lot bigger than what we've seen recently, right? We're down 500 points in the Nasdaq, which seems like a lot, but it's barely 2%. So, on one hand, is it a lot? No. On the other hand, is it a reversal? Yes. You are hitting these key areas of resistance and, making a pretty swift downward move, but we're also just headed directly to the 21 EMA. So the 21 EMA is a great buy spot. When you're looking at this, overall, I don't think it looks too bad. You do have some pretty high volume selling on the lower time frame charts. Every candle has higher than average volume. So when you're looking at this, uh, you know, definitely have some volume selling on our hands. The question here is just how far are we going to go? When we look at the overnight data here, you can see that we were right about here yesterday. This gray area is the price action when the market was closed. So you can see that we got this big gap down overnight. Now, what was interesting is when the market initially opened during the cash session, we did have quite a bit of high volume buying. So, we had the dip buyers coming in right here. We traded higher and we hit 68.47 and reversed from that level. And at this moment and point in time, we're just basically right down to the cash session low. So, sitting here at the lows on the day in the cash session, this is typically a spot where buyers come in. We'll see if we end up getting a buy going into the close or not. But I will say that if we break this level, I would expect a flush. So because we're sitting directly on a key psychological value at 6,800, and that happens to be not only the low from the afternoon session, but also the low from this morning, the initial low on the gap down, it is a pretty critical level. So, you can see that you did break it by about 5 points. So that low came in at 67.95. So with this, that's the main thing that we need to watch. If you look at the lower time frame chart on the Nasdaq, this is going to be the 5-minute chart. You can see that the Nasdaq did break the lows on the day, so it broke the low of the first opening range in the cash session, but then it also broke multiple lows on the day. We are sitting down here at the very bottom low on the day. So this doesn't really have a specific level, I would say, that we're looking for, just making another new low. So I would pretty much focus on the S&P futures on this 5-minute chart. I think that that one's going to be a little bit more relevant in this case, just because of that key psychological value at 6,800. The other things that we want to look for are going to be the market internals. So with the market internals, you can see right here that they've been pretty much in a middle zone. So when you have the market internals and the ticks stuck between negative 600 and positive 600, that just means that there's not really any more selling, more selling than buying or more buying than selling. So what we want to look for the last hour of the day is always going to be an increase in either buying or selling. So for example, if we break below 6,800 and we start seeing ticks that are down at negative 600, down at negative 800 or below, that's the spot where we would want to get short. I don't love shorting the lows on the day, but in a big reversal like this, sometimes it can still work. So when you're looking at this, I would say this is the most important thing to watch, but right now we're just not getting a signal with it because the ticks are right in the middle of the zone. Another important factor here is going to be the vol spread. The vol spread has continued to trade lower all day. This is the volume up versus the volume down. And so, because the volume is just continuing to go down, it just shows that, well, it's a day where we're selling off. So, if this thing starts to drop off a ledge, again, that would be another reason to short the market. If you look at the put call ratio has gotten a little bit higher. So that is good for longs because what happens is when everybody is long and there's nobody left to buy because the put call ratio is so low, which by the way, it has been, it's been down at like 0.44, which is extremely low. Anything below about 0.65 just means that there are way too many call buyers in the market and it's highly possible that the market turns on us, which it is right now. And that has happened after the put call ratio has been so extremely low. So if we just scroll back a few days, you can see the put call ratio got down to about 0.49. Here got down to 0.55. Right here got down to 0.52. Right here got down to 0.43. So when you have a put call ratio that is, continuing to hit these low levels, it's just time for a market correction. So overall, I don't think that this is that big of a deal. It's just kind of a function of, okay, when can we start buying? Is it time yet? Yes or no? I don't know. We're going to look at some individual charts to see, and we're also going to look at the current positions that I have on, and I'm going to take the requests. So it looks like I have a couple of different requests right now. BMNR. Let me see if I have anything. Netflix on the 30-minute. Any earnings trades today? I don't know. I'll look at that as I get to the second half of the session. I do have my earnings list for you. Let's see. I was supposed to do Charles Payne yesterday, and I got bumped for the D-Wave CEO. And I was like, no, but I had already had all of my notes perfectly written up. So let me pull that one up too. I also wanted to check out what D-Wave was doing, especially since I knew that the CEO was going to be on the show. So let me just pull up my earnings notes for you. Let me see where I have them. They're just evading me at this moment in time. Okay, well, I'll find those notes for you because I have my earnings calendar and all that kind of good stuff. So, anyways, let me know if you have any other requests. I'll definitely get to those right now. Let's go ahead and start off with BMNR. So just so you know, anytime the NASDAQ is down 2%, these kinds of aggressive names are just going to get throttled. So it is pretty normal to see this kind of move when the market is lower. So don't be too concerned about all of that. But in the case of BMNR specifically, there's a couple different things going on. I mean, number one, this one was already falling before the market started falling. You can see the way that it broke through the 50 simple right around here. So that was going to be on October 16th. So that was a while ago. You can see that you retrace this level, fell, retrace this level again, and then you actually broke through the 50 simple and rolled over and died. So with this one in particular, I would say that it's shifted gears. Previously we had some pretty good bullish momentum on it, but because it broke through the 50 simple right here and traded lower, at that point, it just shifts gears into bear mode. So with this one, I will say that it's oversold. It has met multiple targets to the downside. It's met the 1272 extension target and the 2618 extension target. However, this is a pretty bearish candle right here. And then, you do have a lower price target at 34.21. You also have this squeeze. The squeeze fired to the downside. So instead of firing to the upside, it fired to the downside. You have 1, 2, 3, 4 candles right there. And so when you're looking at the lower time frame charts and just trying to decide, okay, is the momentum waning at all to the downside? I mean, no, it's not, because you're down at the lows of the day and these candles have higher than average volume. So I would not buy this. I don't know that I would want to sell it either, just because, well, I mean, get short it is what I mean. If I was long, I would probably take a stop on it. But I don't think I would short it here at this level, just because you have already had a, pretty decent move. There is some more downside still that is possible from 40 to 35. But I feel like the big trade here was the break of the 50 simple. So from 51 to 40, I would have said, you know, I like when I short a stock, I like to short it when it breaks the 50 simple. So that would be the spot right there. Um, Bitcoin is getting hammered today. This is also a pretty good example of shorting something at a key psychological level. So right here, this is the 200 simple. And anytime you break the 50 simple, the 100 simple, the 200 simple, those are major key psychological values. And typically a stock can get pretty hammered at that point. So when you're looking at this, that just, I mean, it just doesn't look good. Once you break a key psychological value like that, and you have a wide range expansion candle, which is a candle that is much larger than the previous candles surrounding it, typically you're going to have to look for a key psychological value level to see if it'll hold. Now, in this case, it's definitely going to be 100,000. So 100,000, if 100,000 breaks, that's going to be the point where it's like, ooh, it's going to be pretty hosed, I would say, because this is the area of support that you have that's really between 90, let's call it 97,000 and 102,000. So if you end up breaking below 97,000, that's the spot where it's going to flush pretty hard. So that's not looking very good. Let me see what other requests you have. Oracle, Nvidia, any critical market news? I didn't notice any critical market news personally. I just think that this is a very typical reversal that occurs after you make multiple price targets to the upside. So we had this great daily squeeze. This was consolidation, ready to break out. We had price targets up here, another price target up here. So these are, the two levels that you needed to look for in order to take profits, right? Those two targets have already been met. And so what's always going to happen in the context of a trend is you're going to get a pullback in the context of the trend. So I think that's what's happening here. I think this is a very normal pullback. I think it's exactly what happens when everybody gets way too long. And I mean, I don't think that it's that concerning. It's not very much fun when you're long and, your positions are getting hammered. But at the same time, I think it's a pretty normal market movement, and it's going to provide the opportunity to buy the dip once the pullback is over. So, that's pretty much what I'm focused on. Sometimes I'll find stocks that I'll short when the market pulls back. I do pretty much like to stick with the trend. So, I don't really short very often, just because in this market, because it's been so strong, we'll get like 1 or 2 days of downside. And so what has happened the vast majority of the time this year is that, if you would start getting short when the market pulls back for 1 day, the very next day, it's just going to rip in your face to the upside. So I don't really like trading swing shorts personally. I will do day trade shorts, like with the 0DT SPX right now, for example. I think we're starting to get some buying. So I might actually put on a long right here. But yeah, I mean, I don't in general really short the market, just because we're in a strong market. Now, when we were in a bear market, yeah, I would absolutely go with the trend and short the market, but that's just hasn't been the case, right? So you watched me on Trader TV Live, by the way. Amazing trader and vibe. Oh, well, thank you. Yeah, I can look at Nvidia next for sure. So what I'm monitoring here is basically just, are the lows of the day holding? You do have a little bit of a head and shoulders reversal pattern on this 5-minute chart. 6,800 is holding, but the main driver is going to be the ticks. So the ticks are really starting to pick up. Um, you know, if the ticks can hit up above plus 600 and actually stay there, that's the point where I'm going to go long. So that's what I'm looking for. I don't want to buy like a one tick wonder that just fizzles out and reverses. So for example, if it goes up to plus 600 and then it just reverses back down into zero and even worse, down into negative 600, you basically buy the high, right? So that sucks. Try to avoid that. It happens sometimes, obviously, but we try to avoid it. So what I'm looking for is tick action that is consistent up above the plus 600. And then preferably if we could get a break of this level up into 68.15, that's where we would really rip higher. So I'm looking at that for a potential day trade. As far as Oracle is concerned, this one has been a huge pain. This is one that I really liked, but unfortunately, sometimes what happens is that the squeeze just fires the wrong direction. Everything that I do is focusing on, trying to identify squeezes that are going to fire in the direction of the trend. And, my 5-star system works pretty well for that. But there are going to be times like this where it just doesn't work out. And that's exactly what happened with Oracle. So, applying the 5-star system with Oracle, I mean, you have pretty much everything. You have a ticker that's in a pretty decent bullish trend. Yeah, there was, this price action right here, but that was pretty typical during that time frame. You have something that has traded really well surrounding earnings. Like last quarter, you just had this massive high volume gap up. And so I was looking at this squeeze as a buy. That's because it pulled right back into the 50 simple. It started to bounce. It looked like it was ready to go. And then it just hit that 50 simple and just got destroyed. So sometimes this is going to happen. This is absolutely an example of a time where the squeeze just did not go the direction I wanted it to go. And that would be the point where you would just take a stop. So if it breaks the wrong way, you can see that the squeeze here has fired to the downside. That is, squeeze fired to the downside, and I would be out of that personally. So with the levels to the downside and potential targets, now that we've broken through the 100 simple, I would say that the next zone to look for a possible pause, let's say, for example, if you are long for a short-term trade and you don't want to take a stop, your next point is going to be that key psychological value at 240. So 240 is your key psychological value right there. And that's also going to be the gap fill from that previous earnings report. So ideally, it can hold there. Like I said, if I was in a short-term trade, which I'm not, I would take a stop. If I was in the long stock, I don't think that I have this one in my stock portfolio. I don't think I have this one. But with this one, if I was in it in my long-term stock portfolio, I would still hold it because, I mean, look at it on the long-term pattern, So it all depends on your time frame. The reason why I wasn't sure is because I'm running like 3 different stock portfolios now, and this was one of the more recent ones that I wanted to add, but I didn't pick it up yet. So, anyways, ideally, that one will level out at some point. So Nvidia, I mean, Nvidia is just one of the best stocks out there. I love it. Love it. Love it. But again, it has made multiple targets. So you can see the way that it traded higher. It hit the 1272, it hit the 1618, and it went even higher after that. It went up into 212. So you can see at this point, that it has broken through the low of the high bar. So the high bar was right here, 212.19, and you broke the low of that bar. You pulled back to the 8 EMA. At this point, if I was long a short-term setup in Nvidia, I would absolutely be taking profits. because it has lost momentum at price targets and at the highs. So you can see that at this point, you know, I would just personally take profits. Now, as far as my long-term shares are concerned, there's no way I'm going to sell them. I'm holding on to these things. I'm just going to close my eyes and I'm just going to hold them and I'm going to hold them and I'm going to hold them some more. But for NVIDIA, you know, you do have to keep in mind that it has another earnings report coming up. The earnings report is going to be on the 19th. So perhaps this ticker will hold the 8 EMA, which is right at the $200 price point. If it can stay up above that $200 price point and bounce there, we can probably buy it again going into earnings. So let's just wait and see if we can get a buy on it after this pullback is over. Broadcom, this is another one that has earnings coming up. When you look at the pullback here, you can see that it has broken through the 8 EMA and now it's down on the 21 EMA. So 21 EMA buys, you know, generally going to be a pretty good buy spot. So, you know, let's just wait and see if it holds that level. The squeeze on this one has been really wonky. It has a squeeze right here. It triggered to the upside. It hit an upside price target at 387, almost to the penny. And it has pulled back and it's hit the 21 EMA. So when you're looking at that, it's one of those things where it's like, well, just hit the price target and it's pulling back. Okay, sorry, we got to go back to the S&P now because we're back down at 6,800. The moral of the story is with most of these tickers, what we're doing is we're looking for pullback buy zones. So in general, what levels do I tend to buy as a swing trader? You know, the 21 EMA is a pretty decent spot for you know, pullback buys. With as strong as the market has been, a lot of these tickers have only pulled back to the 8 EMA and then they bounced again. So the 8 EMA is going to be a much more aggressive buy zone. But when you have an aggressive bullish market, that's really the only option you have. Now, when you have deeper pullbacks, which give you a more favorable buy zone, those pullbacks are going to be down into the 34 EMA or the 50 SMA. So the 50 SMA is my absolute favorite because that's really the make or break level. It's a make or break level because you have this spot where if you buy it right there and it breaks, you're so close to your stop loss point. If you buy higher up at the 21 EMA, you really need to give it down to the 50 SMA to give yourself some room. And so the thing is, here, I should just go over to another chart. I was trying to watch this because I thought it was going to break, but it again held. So let's see here. Let me just talk about this while I'm explaining it here. Okay, so here's the 8 EMA right here. Here's the 21 EMA right here. Here's the 34 EMA right here. And here's the 50 SMA. So do you see how if you buy up at the 8 EMA and then you have to give it a stop all the way down in here, you have a pretty wide risk, right? Let's say 365 down into 342. The vast majority of people are not going to want to risk that much to see if their trade is going to play out, right? So that's why it's better if you can buy it on a pullback. So down into 354, that's a good pullback. But again, I would risk all the way down into 340. So that's why the 34 EMA would be a better pullback. And the absolute best would be, you know, if you're going to risk below 340, buy it at 342. Then you have barely any risk on the trade unless you have a major gap down, which is a problem. But just looking at Broadcom in general, if you applied that strategy and you said, you know what, I don't want to risk a lot of money, so I'm only going to buy it at the 50 simple. The problem with that is Broadcom has barely tapped the 50 simple. This one day, barely tapped it. This other one day, barely tapped it. And look at the buyers coming in that day. So it's one of those things where it's like, the 50 simple buy is like a gift from the market gods, but are you going to get it? I mean, no. So if you want to buy it, you know, you could wait for the 34 EMA, but look, it's like it barely tapped it right there. Buyers came in, barely tapped it here, barely tapped it here, hit it that day. So over the course of the last 2 months, you would have gotten what, 3 buy opportunities if you were sitting here like glued to your computer the exact moment that it hit that level. So that's why you'll see me buying at higher levels. Like I'll buy at the 21 EMA or I'll buy at the 8 EMA. And yeah, I know it's a little bit more aggressive, but I mean, can't be sitting here waiting to turn into Skeletor, when these stocks are just never hitting these pullback zones. So you see what I mean? Conversely, you really have to pay attention to these zones because if they break, it's generally a good spot to short the name. Now, for something like Meta, which, I really like the stock, I own the stock in one of my long-term stock portfolios. I'm not going to sell the stock because of a bad earnings move. But on a short-term basis, if you break through a 200 simple like this on high volume, as far as a trade is concerned, then yeah, you have a pretty big sell-off like this. So, you can see the sell-off here, high volume sell-off. I don't like to buy anything when it breaks through some critical support zones like that. Let's look at Microsoft. Let's see, Tesla. Any thoughts on UNH? Okay, so let's see. Microsoft. Microsoft is definitely one of my favorites. And then I'll get to my earnings watch list as well. It's almost time to make an end of day trade. Selling AVGO puts here. If you wanted to sell, yeah, let's go back to AVGO. I have a question about AVGO, so let me look at that. Okay. So if you wanted to sell puts on AVGO, where would you do it? So, I mean, the 21 EMA is a decent spot. Okay. It's a decent spot. You don't have earnings until the 11th of December. So you have a couple different series that you could work with, right? So, if we just go to our options chain, so let's say, for example, you did the November 21st series and you just wanted to sell like the 350s. So you could sell the 350s. If, for example, you wanted to pick up shares of the stock, you could very simply sell the naked puts for $12. I mean, I think it's a pretty good price point. But then you would need to take on the shares. You would need to take on the shares if it fell below that level and you didn't close out your put. Now, if you're talking about just a spread and you want to do a risk defined spread, I would personally do it in the money because that way you're going to get your best risk to reward parameters. So 355 and then 350. So with that, you're looking at about a $2.17 credit. So obviously it's going to reduce the credit if you're selling a spread versus just selling the put itself. But then that way you don't have the potential of being assigned the shares without protection. So, yeah. So, I mean, I like this idea. I like Broadcom. Right now, I own Broadcom in one of my long-term accounts. It's one of my top holdings. I also still have the 2X ETF in this account. So I'm personally looking for a spot that I can buy 100 more shares of this one. 34 EMA looks pretty good. You're down to $53. I still think this thing is headed up to $400 a share. I think it just fell a little bit short. I mean, I love Broadcom. This is also one of the best Phoenix stocks too. So, people come in and buy these names like left and right once the market starts rallying. So I'm not that concerned about it. ALAB, Tim, and Upstart earnings today. Yeah, so I found my list that I made for Charles. Let's just go back to that. Okay. So let's see. We have bullish picks, Light, TEM, Uber, Hood, Tesla, AVGO, DDOG, and Iron. So this was based off of the research that I did on Sunday morning. So definitely always have to update it, but based off of all of the research that I did, I mean, it takes me like 3 hours to do all of this. So I use stock charts. They have an earnings calendar now, which is really helpful because it doesn't have any ads or anything like all the other earnings websites. And then I basically just made an earnings calendar. So let's see, today is going to be the 4th. So these were the ones that reported yesterday. And then today we had Cyber, LDOS. I mean, you can obviously read this. Maybe I should make the font bigger for you. It's kind of small font, is it not? .16 font. There we go. Easier to see. Let's see what we have here. So we have AMD, ANET. Let's see, that's today. Apps, BYND, John Deere. Light is one that I feel like looked like a really good potential short squeeze. This one also looks like a really good potential short squeeze. RVLV, SMCI is a potential short squeeze too. Tim looks really good. Now, I'll tell you, with these short squeezes over earnings, the thing is like you don't know for sure that they're going to short squeeze. So, I mean, you can just wait and see if you get any actual short squeeze and then trade them tomorrow. So we could do that, or we could sell some put credit spreads in them. Let me just go ahead and look at each one. But basically, after all my research was done, these were the ones that I picked out. So CIFR, apps, 8% short float, Light, 15% short float, TIM, 23% short float, RBLV, 17%, Lemonade, 26%. EOSE 30%, Duolingo 10%, SEZL 21%, and IREN is 21%. So those are the main names. I found, yeah, it's definitely more risky for sure. So the reason why I liked this one is because you have this nice bullish pattern. But then, this is interesting. Sorry, I just pulled up a different chart whenever I flip grids. I want to go back to that one. Remind me if I forget. QBTS. Okay, Tim. So anyways, the reason why I like this one is because it has an overall bullish pattern. It has a squeeze. It's right on the 50 simple. And you can see that most recently it had a breakaway gap after earnings. So typically when you have a breakaway gap like this, that is the start of something new. So these are more risky plays when you come and trade a ticker like this. It's like it's losing money. Even though last quarter they lost less than expected, they lost less than expected the quarter before that. They lost less than expected the quarter before that. So it's like we're trending higher, but it's not like it's, profitable. When you look at this, I mean, I feel like it's in a pretty decent spot to just sell put credit spreads. Yes, it is a more risky ticker. If you look at the earnings hot zone stats, you can see that the post earnings 8-day average is about 7%, which is pretty good. So what that means is that you have this time frame after earnings where you have, rallied on average 7% during that 8 days. So it's like if you sell a put credit spread, is it going to go higher afterwards? I mean, you have like a pretty decent statistical chance that that's going to happen. So I do like that idea. Let's see, is that? Yeah, so it's after the market closed today. So let me just go ahead and look at that. So the implied volatility is 151%. And then we have the strike here at 85. And yeah, you have decent volume here. The expected move is $7.90. Um, so, I mean, I feel like $5 wide would be fine. Let's just see what it looks like. So you have, if you sold the 85 strike and bought the 80 for protection, you get a credit of $2.12, which is really not bad. I do prefer to get them a little bit closer to one risk reward. So, I mean, you could do 86, 81. That's a little bit closer to one risk reward. So, I mean, I like that one decently enough. Generally, what I like to do with the earnings trades is I like to go through a couple different ideas before I find the tickers that I'm actually going to trade. So let me go ahead and do that. With AMD, I will tell you that what I typically do on AMD is I sell a neutral iron fly. That is something that has worked well for me for the most part, like quarter over quarter. Now, they did have a big move last quarter. Um, if we look at this and we say, okay, there's a, $14 expected move here. What percent is that? That's going to be about a 6% expected move that they're pricing in. Now, the difficulty with this one is it's already had this massive move, right? So, is it really going to have another 6% move? That's kind of what you're betting on when you place a neutral iron fly. So, I feel like this is a pretty decent bet around 250, just selling the calls and the puts. Probably would have to do $20 wide on it. Let me just make sure that this is. I don't like how Thinkorswim started putting the number here for the EPS estimate because it wasn't there before. And before that little green number would pop up, um, you know, when they actually reported. So that's how you could tell if they reported or not. But now they just write that estimate there. So I don't know if anybody knows what I'm talking about, but I always just want to double check. You always want to double check when the actual earnings report is because you don't want to, make the trade at the wrong time. So I'm just going to save this idea. Shorting IonQ for earnings, Upwork, any view on Galaxy? Man, Galaxy was kind of a pain and got me this last time. I closed out my calls on Galaxy. I can go back and look at it. You always know that a lot of people are trying to trade when your platform is freezing. All right, let's see. All right, so you have, quite a bit of volume and open interest at the 250 strike. So the reason why I like doing stuff like this is because you're selling premium and what you're doing is you're just betting on the ticker staying in a range. It already moved 3% today. It's right near a key psychological value. You have a lot of volume and open interest here. And the most important thing is you don't have a lot of risk. So if you have a $15 expected move and you can get an $11.16 credit with high implied volatility, that's something where it's just one of those things where you're just trying to trade the vol crush. So you sell this today with the idea that you buy it back tomorrow, try to buy it back for like $8. So if you sell it for 11, try to buy it back for 8. And then the most important thing is the risk that you have on the trade. So you only have about $380 of risk on the trade because of the $15 wide credit. So you're risking about 1 to make 1. Ooh, and I think it might be time to start buying the S&P plus 585 on the ticks. I've been sitting here waiting for the ticks to go, and it's like just nothing has been happening. We could also do this a little bit wider. It has a little bit more risk. So if you do it $20 wide instead of $15 wide, your risk is going to be a little bit higher because you're going to have about $6.70 of risk per contract. Um, but let's see here. Uh, so for one contract, you'd have about $384 of risk. It says the max profit is like $1,000, but you would pretty rarely get the max profit just because I don't usually hold these into Friday. I just sell them today and then I buy them back tomorrow, like at the market open. So I'm going to do that one. I'm going to post that one in the trading room to open. This is a neutral trade for AMD earnings. The idea is that I'm selling the juiced up options premium before earnings, and I want to buy the Condor back tomorrow for around, let's call it $8 to $9. If AMD has a 1.5 or 2x move, then I will have to buy the spread back at a loss. The max loss is $384 per contract. All right, so that's my alert there. Okay, I think we can buy the S&P now. Let's see. I want to just try to get filled on this one. Come on, plus 600 on the ticks. Give it to me. Let's go. Let's go. $8 expected move. Can we make it to 6,800? 16 minutes remaining. Plus 600 on the ticks. So the ticks have fizzled out every single time they've hit plus 600. So the reason why I haven't done an end of day trade yet is because literally every time it's hit plus 600, it has reversed, which is annoying. But let's see. Come on. Come on, little tickies. You got it. You see how it's come right up here and reversed? Oh, we have a bright green candle. Come on, you can do it. So we have the vol spread that's just continued to go lower, which is bearish. But we have a green candle now. I'm pretty close to pulling the trigger on this. If it can just pop right, okay, I think I should try it. If it can just pop right above this high, it should go. Come on. Come on. Let's go. But we only have 288 on the ticks. That's really not enough. So the risk you run is just, buying the high, which is annoying. But you could also do it just a little bit tighter. You could do like the 6790, 6800, 6810. So then it would cost less. Wiggle the mouse, wiggle the mouse. Come on. Come on. At least if we can buy it on a down tick, then it would be cheaper. Okay, 295. What's the range of the ticks that's ideal? So you don't want it to be what I call like the one tick wonder, where it just spikes up into plus 600 and it reverses. That's the worst because then you buy the high. So you're paying the most and you're buying the high. So that sucks. Um, you want it to go up to plus 600 and stay there. If you go up to plus 600, stay there, and then go up to plus 800, that's what you want. You do not want it to spike up and then just roll. See what I mean? So, I still like this idea. The price has come down. Doing it for $2 is really not bad. New low in the VIX. Well, not low on the day, but new, more recent low. But you have the ticks going down to negative. Ooh, we don't want this. Well, you don't want it if you're going to try to go long. So ticks are down into negative 400. New low on the vol spread. But what's interesting is that the VIX is not spiking. You know, typically you'd see a VIX spike if we were going to start selling off here. We're not seeing a ton of confluence because we have the ticks that have gone lower. We have the vol spread that's gone lower, but the VIX isn't moving. All right, I'm filled on AMD. It's like, can we break it? Yes, we can. Maybe it's time for a younger ticks cheerleader. Maybe it's time to tell a story or something. I mean, I don't know. It's got to get through this level. Come on. Come on, baby. You can do it. Oh. See, I mean, you don't want to buy it when it's like right there. That's no fun. BITX or coin. Yeah, let me know if you had any requests that I missed. Meta long at 628. I don't want to get long Meta when it has broken through the 200 simple. That's kind of like the death cross for me, where it's like, that's if you're talking about a long-term stock purchase for like a dollar cost average kind of thing, then I wouldn't mind that. But I mean, I wouldn't want to buy it on a short-term basis. All right, so we had a pretty big reversal here. Let's see if it'll break 6,800 now. You're down at negative 700 in the ticks. May be able to switch sides. Doesn't appear that Henry and John are doing anything with the end of day trade. Come on, Henry, where's your trade? Okay, if it's gonna break, if it's gonna break 6,800, that's where it's gonna flush. John says, Bitcoin falleth. If it breaks 100K, and it likely will, it could get very interesting quickly. CRWV is just a mess. Tesla, of course, I want to buy the dip. There is a big gamma strike at the SPX 6740. That could change, but wanting that for the close. Okay, that's the first time I saw that. All right, let me go over any of the additional requests that I have. Would you go ahead and enter a sell order for the AMD trade? Yes. Yeah, you can definitely go ahead and enter a sell order for that. I was still trying to decide if I was going to do something with this for the last 10 minutes. It's just pretty range bound, guys. There's a ton of open interest here at the 6770 strike. Let me see if I can respond to the rest of these questions. So Galaxy So this one, definitely no good once it breaks the 50 simple. It was looking really good with the daily squeeze. That was when I made the video on it. It was right here. It was about to go. It was up above the 8 EMA. Everything looked great. You had a nice trend, you had a nice squeeze, and then it got this gap down. Typically when a stock has one gap down, I don't usually do anything different with it. But then what happened was the next day it gapped down again and then it broke the 34 EMA. And once it breaks the 50 simple, I mean, it's just like it's dead to me. So the break of the 50 simple, no good. Squeeze firing to the downside, no good. Um, so I had to take a stop on that one. I lost money on Galaxy. I took the stop like a few days ago. So I don't know exactly where that was. I think it was maybe this day when it gapped down. But I'm out of that one for now. SoFi. So, I mean, I think this one looks great. This is in a great trend. Really, really nice trend. It moved well after earnings. It pulled back to the directly to the 21 EMA. I mean, that's a spot to sell puts, sell put credit spreads. It has multiple squeezes on multiple time frames. I think it looks great for a long. It's down 3.5%, which, I mean, it's not a little bit, but it's also not down 10%. And it's down in the context of the trend. So I'm not really ready to start buying this dip yet because there's been no sign that the dip is done dipping. So usually give it 2 days before I start adding a bunch of longs, but SoFi looks like a great one to add. Let's see, ARM. So this is one that I've been buying long-term shares in one of my kids' accounts. It has a weekly squeeze. I think it has a lot of really good long-term potential. It hasn't really done a whole lot recently, but let's look at the earnings grid. So this is a little tricky when I don't love it when I have a ticker that I like it on a long-term basis, but yet you can very clearly see it falls every time after earnings. So it's kind of like, yes, I like the stock, but very clearly with the stats, you can see that it falls after earnings. So it's like, do you want to sell a put credit spread? I mean, no, because statistically it does not have a high probability chance of it working. Could it work this one time just because there's or like a random fluke? Like, yeah, sure it could. But if we look at the expected move here, $16 expected move, $161 stock, could you sell the neutral iron fly and try to make money on it that way with a premium crush? You could try that. You're trading right at a key psychological value at 160. The moves recently 9%, 4%, 6%, 3%. I mean, that's within a 9% range. It does have a squeeze though. So I do try to avoid selling neutral premium when there's a squeeze. So there's that. But I mean, I'm still buying the stock, holding the stock. QUBT. And I wanted to go back and look at D-Wave too. So, because I know that this one, these are the quantum names, made new lows in the day in the S&P. Guess it's good I didn't buy the 600 tick. That's exactly why you want to look for consistent ticks up above plus 600 instead of, the one tick wonder. So for this one, I know Charles had the CEO of this one on his show yesterday. So I was a little interested in seeing, how that would react after the fact. I mean, it was down like 10% yesterday, and then it's down like another 10%, 11% today. So that's no good. I do, I like this name overall. I think it's had a really good move. I think all of these quantum stocks have had great moves, and I'm looking for opportunities to buy them. The issue with these names, though, is just that when they fall, they just get hammered because they're just so volatile. And when the Nasdaq gets hammered, I mean, they're going to get hammered like 3 times as much. So, I think QBTS still looks pretty good. It still has a potential for a short squeeze coming up. QUBT, though, I don't like the way that it broke through the 50 simple. So, again, when a stock breaks the 50 simple, it's usually not a very good sign. It's coming down at this point to the 200 simple. So let's just see if it can hold there. And then the main thing with this one is going to be earnings. So with this stock in particular, looks like it did have this 14% move. Don't have a ton of history on it, but I think we're just going to have to wait with that one until earnings to see what happens there. AMD call wall all the way at 300 has me laying off the earnings. Yeah, 300 is a key area of resistance. When heading into the last hour of the day, do you always look at the tick, the S&P futures, and the put call for guidance on a quick scalp? Yes. And I really wanted to get one on today, but there was just not. I think the only thing I probably could have done is shorted it when it hit the shorted it when it hit this level right here. I would say that it wasn't super clean, but that probably would have been the only spot that I could have, shorted it, just because you had the ticks come up into the plus 600 range. I was looking at it for a potential breakout. When the breakout failed, that could have been a spot to short it, but I would say that, the main reason why I just didn't really do anything with it was because there wasn't a lot of confluence. You had the ticks go negative, but I mean, it's not like the ticks were getting hammered. When the ticks are at negative 600 and staying at negative 600, and the vol spread is dropping off a cliff and the VIX is making a new high, like that's an obvious, okay, let's short it, guys. When it just kind of hits there and it's just, it's a little weak, but it's not that weak, and all these internals are just pretty much stable. It's one of those things where it's like, yeah, maybe you can get a few points on it, but it's just not super clean. So sometimes it's better to just save your money, if you don't have anything very clean. Do you trade on a 1 minute time frame? No. For the most part, I really don't day trade. I primarily swing trade, or I do like a lot of overnight trades for earnings. I don't even think I have a 1 minute chart on my charts. The lowest time frame that I have is 5 minutes. When I used to scalp futures, I would use tick charts, and I would use like a 3-minute chart, but it just does not fit my personality. I just, I have 3 kids. I don't really want to be. What the biggest issue for me with trading on that short of a time frame has always been my lifestyle, the kids, I do a lot of TV. Um, I don't like being in a trade and then, the babysitter needs me or something like that. And it's like, oh my gosh, it's going to get hammered if I try to go grab a glass of water, that kind of thing. So I don't really like trading on that short of a time frame. Um, the last hour of the day, I will day trade for sure. The last 30, 45 minutes, but even those trades they're like 30, 45 minutes in length. They're not like a 5 minute in and out usually. Sometimes I will do just the last 10 minutes of the day. And of course, during the last 10 minutes of the day, I'm not going to like walk away and go get some water or something like that. But I don't know. Does that make sense? So this is the grid that I normally use. This is a daily chart, a 195-minute chart, and then an hourly chart. This is because this is my primary swing trading grid. I will go and drill down to like 15-minute chart that I use. I will use a 5-minute chart for the day trades that I do in the 0DTE SPX. But for all of my swing trades, I would say the primary charts are going to be at least a 30-minute time frame. Then we have a question. I want a short Ion Q for earnings tomorrow. All right. So whenever somebody asks me about that, I just look at the stats. So, how often is it up after earnings? How often is it down? What is your percentage of probability, what is the likelihood that you're going to be right? So in this instance, 3 out of the last 4 quarters, it's traded lower. You also have a head and shoulders pattern. You have a break through the 50 simple. I don't think it's a bad idea to short it, especially with the kind of the market pullback we're seeing. So, break through the 50 simple. The thing with earnings is obviously you never know what their report is going to say. So just always make sure that you control your risk. Is today a good day to add to a long-term SPY or wait for a bigger pullback? It just depends what is your strategy. If it's long-term buy and hold, I think it's fine. If you're trying to do like a 2-week swing trade, then I would give it another day or two, just because when you have one down day, there's usually a second down day that comes after the first down day. But when I'm buying long-term stocks, I'm not that concerned about, is tomorrow going to be marginally better? It's like, who cares? You're in 10 years, is it going to matter if it was $3 difference? So for Upwork, great move, great earnings move. This was up 13% at the market close. It was up 20% overall. So this is a potential short squeeze, and it has the squeeze right here too. So it looks like a nice target would be $20.54. Actually, let me make sure that one still has short float. So it's 9% short float. So it's pretty decent. Is it possible for you to share your toss grid without the premium indicators? Yes, I have a grid that is available for the trading room. So for anybody who's a trading room member, I have a shared grid. And so for anybody that signs up for the trading room, if they sign up for the trading room, then they get access to my shared grid. If Lorna's there, Lorna has the link to it. So it has my tools on it. Um, has my candles on it, has my VZO on it. It just doesn't have the Squeeze Pro. So let me see if Lorna posted, and if she doesn't post it, then I'll find it and I can post it for you. Short on Intel. Yeah, I mean, I can see that. You just had this massive move higher, reversal, break of the low of the high bar. You have the break of the 21 EMA. The next price target would be 35.63 and then down at 32.76. Let me go back to SPY. Thank you. Mirza posted the link to my Thinkorswim grid in the trading room. Come on, where spiders? So 21 EMA pullback in the spiders is pretty good. A better pullback would be 34 EMA, which would be 669. So, $6 lower. The best zone that I really like is going to be the 50 SMA, which is going to be around, let's call it 660, 663. But again, if you're just buying long-term shares, it's not going to make that big of a difference if it's a $6 entry point. The same thing, I'll say the same thing about the spiders as I said about Broadcom. It's like, if you have a trading plan where you say, you know what, I'm going to buy the spiders every time they fall to the 50 simple. And that's what I'm going to do. I'm going to dollar cost average at the 50 simple. And then you look at this year and it's like, when would you have been able to buy it? The 50 simple is this yellow line. So literally ever since the tariff crash, I'll call it, the only time you would have been able to buy it per a trading plan that says that would have been right here on October 10th if you were very quick, and then right here on October 14th. So whenever people ask me like, oh, is this a good spot to buy or should I wait? It's one of those things where it's like, I mean, yeah, you can try to wait until it gets to the 50 simple, but if you look at the entire year of time, you only would have had like 2 opportunities. And if you would have just bought it at the 21 EMA, which is where it is right now, look at all the 21 EMA pullbacks that there were. There was one right here, 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 there was one right here. So it's like, I would personally rather regular dollar cost averaging on a long-term basis for long-term stock portfolios on regular pullbacks to the 21 EMA than, hey, I only got 2 pullbacks in the last 6 months, but it was a deeper pullback. Because it's like, this 21 EMA pullback was a more shallow pullback, but that pullback was at 574. This pullback to the 50 SMA was at 652. Do you see what I mean? Netflix, how to play the split. Oh, yeah. When I heard about the Netflix split, I was so excited. It's just so much easier to trade these Mag 7 names when they're at a lower price point, just for a variety of different reasons. I mean, they have the more volume in the options market. The spreads are smaller. You can get a lot smaller trades. Less investment is required. I also generally love trading a rally going into the split. That's something that I always try to do. So that's fun too. In this case, though, it just isn't setting up. It had a squeeze that fired to the downside. It failed. It failed after earnings. It rolled over 2 quarters in a row after earnings, not just 1 quarter, but 2 quarters in a row. So when you have a ticker that rolls over 2 quarters in a row after earnings, that is just not good. So that turns it into the earnings destruction setup where it goes 1 tequila, 2 tequila, 3 tequila floor, where the next quarter it's just set up to get absolutely destroyed if it falls again. So I don't love that. I don't like how it's below the 200 simple. It's really, really difficult to trade a ticker going higher when it's below all of this resistance. So I don't think I'm going to trade a rally going into the split. It just doesn't look very good, to be honest. So I think I'm just going to have to avoid it. How did I not make it to Tesla? I was just hanging out a little bit late here to see if AMD would report. Yeah, Tesla, just nice little 21 day pullback right there. Yeah, I mean, I say if the market rallies tomorrow, buy Tesla. SoFi looked really good. Broadcom looked really good. 21 EMA pullback. If it falls one more day, we're just going to get deeper buy levels, which is fine. Microsoft is one of my favorites, but I don't love the break below the 50 simple. It has got to stay up above $500 a share. Preferably up above 515. What EMA and SMA timeframes? So this is a daily chart, and I have the 8 EMA, the 21 EMA, and the 34 EMA. And then after that, I have the 50, the 100, and the 200, which you apparently can't even see on this chart because it's all the way down here. 462. All right. Well, that's about all for me today. Thank you so much for joining me. If you have any additional questions, you can email me at Danielle@simplertrading.com. And I hope you have a great rest of your day.